And we've got major issues for investors this morning, folks. Taking a look at what's happening in the futures market. We are poised to come under severe pressure today. And the big story is the NASDAQ right now. The major average right now is down more than almost now. We're pushing it lower, 2.41% on the NASDAQ in the pre-market. We are threatening to give back a lot of that rally we had yesterday. This has been a volatile month, the most volatile October in 118 years. And there are predictions the markets could come down after the elections. Let's get into all of this right now with Gary Smith, the Kadina Group, and Albert Brenner, People's United Wealth Management. Guys, good morning.
Morning.
Good morning.
Gary, I want to start out with the news of the moment, and that, of course, is what we're seeing, this major sell-off on the pre-market on the NASDAQ. And as we're seeing again, this week in particular has been a roller coaster for investors, and Friday is not disappointing in the excitement.
Yeah, exactly. This is, we're getting in a real, I guess for lack of a better phrase, kind of throw-up territory. And my first thought when I woke up this morning was, sell everything. And that's usually a time, at least for me and most people, to start buying. You know, I noticed that Amazon in particular looked to be probably from the recent high, which was just a few weeks ago, down about 20%. That feels so scary, but you look back at the sell-off from March until April, and what was the figure? It was down about 20%. I'm not saying to go all in, but I'd sure rather be a buyer now of some of these stocks than a seller.
But Albert, is this the time to buy stocks right now? What does it take for someone to come in and basically make the bet that stocks just got cheaper and maybe this is the bottom of the market?
Well, I don't think any investor should be trying to time the bottom of the market. That's a very perilous task. The question you have to ask yourself is, can you buy stocks right now at fundamental values that are likely going to appreciate over the course of time? And is this the bottom? I don't think anyone can tell that, but you can get good values.
I'm only saying that because typically stocks rally after an election. So if we're going up in November or November 7th on, maybe this could be near the bottom. That was my point.
Right, exactly. And maybe it's not today, but better today than not at all.
Gary, let's talk about what's happening in particular with technology stocks, which really is kind of what we're watching right now. And as we're seeing the concern about regulation on a name like Google or Facebook or Twitter, whether it's the EU or the United States, or whether we're seeing worries about Amazon, the back away from the web services business, which has been the big pressure here. We've been so dependent on FANG stocks this year for this market rally. It's been the bread and butter of where we've made our cash. That seems to be really in jeopardy now for multiple reasons. What's going on there, Gary?
Well, look, I think that we have worries across the board. If it's not regulations, it's certainly geopolitical, with Saudi Arabia. If it's not that, it's oil prices going up or down. If it's not that, it's interest rates. So I think it's kind of like death by a thousand cuts right now. But the bottom line is you had two companies, Amazon and Google, that although they missed their expectations, I suppose, they had revenues up 30%. Amazon earnings went from $3.14 a share to $5.74 a share. That's phenomenal. So the real question is, despite everything that you and I just talked about, regulations, interest rates going up, do you think a company like Google or Amazon is going to be worth more 2 or 3 years from now than it is now? And you'd have to say almost yes. I mean, Amazon across the board, for example, is growing by leaps and bounds.
What's changed?
Unless you think we have another 2008 economic collapse across the board. Again, I like these companies despite all the headwinds that we just mentioned.
So I think what Gary's saying, Albert, is that the perspective has changed. It's now the pessimistic perspective, even though the numbers look pretty decent coming out of these companies, at least as far as the bottom line is concerned. And I was looking at the cash on hand for Google, Albert, $106.4 billion. I mean, this is a strong company.
I agree, and I think Gary's perspective is spot on. And that is, you can look to see what's going to happen and try to predict what's going to happen over the next 30 days or over the next 60 days. But I think that longer-term perspective is going to serve investors better. And I agree with Gary's outlook that, 2 years from now, these companies are going to be valued more highly than they are today. despite concerns about regulation.
You know, we talked about this in the beginning of the segment, Gary, and that's the issue of the midterm elections. And there's two schools of thought out there. One is that we've had an incredible market, an incredible economy under Republican control, whether it was the White House or the Senate or the House. But if the House does go and we get this blue wave come next week, that could actually be a problem for the markets. Normally we like gridlock, but some analysts are saying that gridlock could be bad for the markets.
Well, you know, look, I agree that the economy, at least the stock market and the economy, has been very good under this all, you know, red wave that we've had. If it changed a little bit, I'm really not concerned for this reason. Historically, although you know, everyone's throwing their hands up this blue wave, historically, a mixed Congress with a Republican president does pretty darn well. You know, I think that, you know, Congress, the whole, you know, executive branch and Congress, it's like this big ocean cruiser. It takes so long to move that even a change in the House, if there is, becomes Democratic. I think very little effect on the economy.